Hello friends, welcome back to my channel Finance Eco India. Today we are unpacking ICICI Bank's Q1 Financial Year 26 results, net profit, margin update, analyst reaction, investor signal, management guidance and the growth roadmap. But before that, please subscribe to my channel. Let's get started. ICICI Bank posted a standalone profit of 12,768 crore, up 15.5% year-on-year, easily beating analyst estimate of around Rs 12,024 crore. Net interest income climbed 10.6% to Rs 21,634 crore, driven by 12% loan growth led by corporate and business banking. However, margin narrowed slightly to 4.34% due to RBI rate cut. Analyst has projected a PAT range of Rs 11,649 to 12,382 crore and NII growth between 7 to 9%. ICICI delivered Rs 12,768 crore in profit, comfortably beating consensus and surpassed NII estimates, although margin declined slightly. Overall, a solid beat on both fronts. Total loan grew by 12%, powered largely by commercial and business banking. Despite rose about 13%, asset quality improved. GNPA fell to 1.67% from 2.15% a year earlier. However, provisions spiked 36% to Rs 1,815 crore, reflecting prudence amid potential credit risk. ICICI management credited the profit beat to robust loan growth and higher NII. They acknowledge margin pressure from rate cut but expect improvement through better pricing and mix. They reiterated focus on credit quality, citing tighter provisioning to manage risk. So for investors, the beat confirm operational strength. Keep close watch on margin stability as NIM tighten. Rising provision underscore credit cautious. From a technical standpoint, a breakout above Rs 1,430 to 1,440 could trigger further gains. Stock is already up 0.5% today. So looking forward, ICICI aims to sustain 14 to 15% loan growth while managing NIM amid rate cut, scale up investment in digital banking and SME lending continues. Key risks include macro slowdown and interest rate volatility. Now let's summarize. ICICI Bank delivered a strong beat on Q1 profitability and core income. Loan book expansion and improved asset quality are encouraging, though margins and provisioning trends warrant attention. For investors, maintain your position but stay alert to names and potential provisioning surprise. Thanks for watching. Don't forget to like, subscribe and let us know if ICICI is on your radar. Thank you and Jai Hind.